Hello everyone, this is Raghav Maheshwari. Today's chapter is Consolidation of Accounts. First of all, we will discuss what is consolidation all about. Consolidation of accounts means consolidating the accounts of subsidiary companies with the accounts of holding company. You have heard about the holding company and subsidiary company. Holding company means parent company and subsidiary company means child company. So, what is the holding company? Here is the meaning of holding company. In general, a holding company is one which acquires all or a majority of the equity shares of any other company called the subsidiary company. Suppose there are two companies, A Limited and B Limited. A Limited acquires majority of the shares, means more than 50% shares in S Limited. The the first mentioned company will become the holding company of the other company. So why the consolidation of accounts is useful? Guys, consolidation of financial statement is very useful for investors because it helps the investors to easily understand the overall corporate performance without getting into each subsidiary's detail. If any investor want to know the what's the financial position of the whole group, he can he or she can easily know by just by looking at the consolidated financial statements rather than looking at the financial statement of each and every company, of the holding company and of each and every subsidiary company. The investor is not required to do all such things. Investor just have to look at the financial statements, consolidated financial statements, and he would easily know the financial performance and uh, financial the financial position of the whole group. Here are some definitions which are given by the Companies Act 2013. So the first definition is definition of holding company. According to section 2 subsection 46 of the Companies Act 2013, holding company in relation to one or more other companies means a company which of which such companies are subsidiary company. Means this is a company of which other companies are subsidiary company. The Companies Act 2013 has not given the clear definition of holding company. The meaning of holding company can only be understood by going through the definition of subsidiary company. So we should have a look at the definition of subsidiary company as per Companies Act. According to section 2 subsection 86 of the Companies Act 2013, subsidiary company or subsidiary in relation to other company, that is to say the holding company, means a company in which the holding company controls the composition of board of director or exercises or controls more than one half of the total share capital, either at its own or together with one or more of its subsidiary company. What does it mean? So, a company can become a holding company of the other company by either by having the control on the composition of the board of directors or by exercising or controlling more than one half of the total share capital at its own, either at its own or together with one or more of its subsidiary company. Let's have an example. Suppose there are two companies, A Limited and B Limited. A Limited have the ability to control the composition of board of directors of B. Say for example, A Limited, if the A Limited bonds, it can appoint or remove the composition of the board of director of B, then A Limited will be the holding company of B Limited. as per second point, if there are two companies A and B, and A Limited have more than 50% of the share capital of B Limited, either at its own or together with one or more of its subsidiary. It's not necessary that the A Limited itself hold the majority shares in B Limited. A Limited can hold such shares, such majority shares together with other companies as well. Then also the A will be called the holding company of B Limited. So this is the definition of subsidiary company as per Companies Act. One proviso is also given in the Act which says that such class or classes of holding companies as may be prescribed shall not have shall not have layers of subsidiaries beyond such numbers as may be prescribed. The Companies Act has prescribed by its rules two layers, which means there shall not be more than two layers of investment subsidiaries. What does it mean? We shall have a look at the next slide. Then the picture will be clear. There is one company, H Limited. H Limited holds majority of the shares of S Limited. So H Limited is the holding company of S Limited and S Limited is the subsidiary company of H Limited. H Limited also holds majority of shares in Q Limited as well. So Q Limited is also the subsidiary of H Limited. And S Limited controls the composition of R Limited. So R Limited will become the subsidiary of S and S will become the holding of R. Now R is subsidiary of S and S is subsidiary of H. So R shall also be the subsidiary of H. Means H shall have the subsidiary S and subsidiary R and subsidiary Q. Okay. And what is the relationship between S and Q? These will be called the sister companies. Okay. I have typed one example. Suppose H is holding H is holding company of share H is holding company of S because 51% shares of H in S. S is also holding company of R because S have power to appoint the board of director of the R, and then H is also holding company of R. This is the same example which I discussed with the picture. I hope it is clear now. Now, how the financial statements of holding and subsidiary companies are consolidated. Before knowing this, we shall have a look at a general example. This is the example of a father and a son. I am reading this out. Suppose father has 1000 rupees and son has 100 rupees. Out of the 100 rupees of son, 80 rupees have been borrowed from father and 20 rupees have been borrowed by him from his friend. Means son has collected 100 rupees by borrowing 80 from his father and 20 from his friend. Now, if I want to know the financial position of father and son collectively, what shall I do? Whether I'll say that the collective position is 1000 or I will say the collective position is 1100, that is 1100, or I will say something else. I shall not consider the loan taken by the son from father. सन ने फादर से जो लोन लिया है उसको कंसीडर नहीं करेंगे फादर एंड सन की कंसोलिडेटेड फाइनेंशियल पोजीशन पता लगाने के लिए. Instead, I will add up the father's and son's amount, that is 1100, and thereafter deduct 20 borrowed from friends. Therefore, the collective net worth of the father and son will be 1080. That is 1000 plus 100 minus 20. 1000 is of father's money, 100 is of son's money, but 20 is payable to the outside parties, that is the friends of the son. So we shall not include this in the net worth of the family. So the net worth of the family or the financial position of the family shall be 1080 rupees only. I hope it is clear. We shall use this concept in the case of holding and subsidiary as well in order to consolidate the financial statements of those companies. One more thing I would like to make you clear that I hope you know that the shareholders fund equal to the net assets. Shareholders fund is equal to the net assets. I have given an example which I shall discuss with the help of the graphics. Suppose, this is a balance sheet of holding company and this is the balance sheet of subsidiary company. Holding company has taken the shares of subsidiary company, so the shares in subsidiary company or the investment in subsidiary company is being shown in the asset side of the holding company. As I told you that if we want to know the collective financial position of the group, we shall replace the investment in subsidiary from the balance sheet of H Limited with the net assets of the S Limited. What shall I do? This is the investment in subsidiary. H Limited is saying that I have invested some amount in the S Limited, and S Limited shares include the holding company, because holding company is the shareholder of S Limited. So if we want to know the financial performance of the whole group, we shall replace the investment in subsidiary by the net assets of the by the share in net assets of the subsidiary company. But what we do in order to consolidate, we first of all you should know that the shareholder fund equal to net assets I have already discussed with you. So now I am replacing the investment in subsidiary by the net assets of the subsidiary. Okay, say for example, the holding company is holding only 80% shares. I'm just backing the step. Suppose the holding company only holds 80% shares in the subsidiary company and 20% shares are held by outside parties, means persons other than holding company. 80% shares are being held by holding company and 20% shares are being held by outside parties. But in order to consolidate, we just sum up the balance sheets of both the companies, means I am replacing this investment in subsidiary by full of the net assets of the subsidiary company. So what I have done, I have included the portion of net assets which is being held by the outside parties also in my holding in the balance sheet of holding company. So now what I will have to do, I will have to create a separate liability in the balance sheet of holding company by the name of minority interest in order to match the balance sheet. What does it mean? The shares of holding company have the own the assets of holding company and the portion of net assets of subsidiary company, but we have included the full net assets of subsidiary company into our balance sheet. So while only 80% shares were being held by the holding company in the subsidiary company, so for the rest 20% we will have to create a separate liability which will be called the minority interest. I hope it is clear. I hope you have got the meaning of minority interest. So I'm repeating, what is the minority interest all about? Minority interest is basically the portion of the net assets of the subsidiary that belong to the shareholders other than H Limited. It is that portion of the net assets of the subsidiary which do not belong to holding company, which belong to persons other than holding company. So such other persons are shown as minority interest in the balance sheet of holding company. And this slide shows the adjustment of reserves and profits of the subsidiary appearing in at the time of acquiring shares. Guys, look at the and look at this. Uh, at the time when the shares in subsidiary company are acquired by holding company, there are some profits which are shown in the balance sheet of subsidiary company under the head shareholders fund. So if so now we will have to compare the cost of investment, means the investment in subsidiary, with the portion of net assets of the subsidiary company. What does it mean? Suppose if the investment in subsidiary is recorded at the book value, no adjustment is required. But if it is shown at a value lower than the book value, say face value or any other value which is lower than the book value, then the difference will be treated as capital reserve. And if it is recorded at a value higher than the book value, then the difference will be treated as goodwill. Uh, I am repeating this, I am explaining more clearly that H Limited has acquired 80% shares in S Limited at some value, say 1 lakh rupee. But the net assets, that is assets minus external liabilities of subsidiary company is also 1 lakh. So the 80% of the net asset of subsidiary will be 80,000, but the shares in subsidiary have been acquired for a value of 1 lakh. Means holding company is getting something of value 80,000 by paying value 1 lakh. So holding company is paying 20,000 more. So that 20,000 more which the holding company is paying will be called the goodwill. As against this, if the portion of net assets of subsidiary company is less than, sorry, is more than the cost of investment, the difference will be called the capital reserve. Means holding company is getting something of value more than what it has paid. I have typed the formula as well. Goodwill equal to cost of acquisition of shares in subsidiary minus intrinsic value of shares acquired in subsidiary. जो भी शेयर्स एच लिमिटेड ने एस लिमिटेड में खरीदे हुए हैं, उन शेयर्स की इंट्रिंसिक वैल्यू या फिर बोल सकते हैं नेट एसेट का 80%, अगर 80% शेयर्स खरीदे हुए हैं तो अगर कॉस्ट ऑफ इन्वेस्टमेंट से कम है, मींस कॉस्ट ज्यादा पे की हुई है, तो जो भी एक्स्ट्रा अमाउंट पे किया हुआ है इन शेयर्स को खरीदने के लिए वो गुडविल कहलाएगा. एज अगेंस्ट दिस, capital reserve equal to intrinsic value of shares acquired in subsidiary minus cost of acquisition of shares in subsidiary. Means सपोज 80% शेयर्स खरीदे हुए हैं एच लिमिटेड ने एस लिमिटेड में, उन 80% शेयर्स की इंट्रिंसिक वैल्यू, इन अदर वर्ड्स आई कैन से द 80% ऑफ द नेट एसेट्स ऑफ द सब्सिडरी कंपनी इफ ज्यादा है कॉस्ट ऑफ एक्विजिशन ऑफ शेयर्स इन सब्सिडरी से, मींस इन शेयर्स को खरीदने के लिए पे कम करना पड़ा है बट वैल्यू ज्यादा आई है, तो डिफरेंस विल बी कॉल्ड द कैपिटल रिजर्व. आई होप इट इज क्लियर नाउ. The next slide shows the post acquisition profits. What does it mean? These are the profits earned by the subsidiary company after the acquisition of shares in the subsidiary. Such profits will always be treated as revenue profits and will be shown as the general reserve or profit and loss account in the consolidated balance sheet. These are the profits which the subsidiary company have earned after the holding company acquires shares in it. For example, suppose the H Limited has acquired 80% shares in S Limited on 30th of June 2021. But after the accounts are being closed on 31st March 2022. So from the time of acquiring shares till 31st March 2022, that is 9 months, the subsidiary company must have earned some profits. These profits are not directly given to the holding company, or it means holding company has not become the owner of such profits just by acquiring shares, while holding company has invested the amount in the subsidiary and the subsidiary have earned these profits over a period of time, that is 9 months. So these are the revenue profits. These are not capital profits, because holding company has something to do with these profits, because holding company has now invested the money in the subsidiary company. So anything which the subsidiary company is earning, that will be called the revenue profits of holding itself. So such profits, the portion of such revenue profits of subsidiary company will be shown as either general reserve or profit or loss account in the consolidated balance sheet of holding company. Now there is an example on your screen. Here are the balance sheets of holding company and subsidiary company. You can see in the asset side of the holding company that one that 1600 shares are held, which are purchased at cost, which is the cost of acquisition. 1600 shares are held in the subsidiary company, and the subsidiary company has total number of shares of 2000, that is 2 lakh divided by 100. So out of the 2000 shares of subsidiary company, 1600 shares are held by holding company itself, which comes out to 80%. Means 80% shares are being held by holding company in the subsidiary company. So what shall we do? First of all, we will calculate the minority interest. So for calculating minority interest, we shall calculate the net asset of the subsidiary company. Total assets of subsidiary company are 2,88,000 and the outside liabilities are 48,000. Other things are shareholders fund itself, so we shall not deduct these. We shall deduct only 48,000 from 2,88,000. The answer will be 2,40,000. So 2,40,000 is the total net asset of subsidiary company. Out of this 2,40,000, 80% is held by holding company and 20% is held by outside shareholders. So 20% of 2,40,000 shall be 48,000. So our minority interest will be 48,000. Don't worry, I'm gonna show you the solution as well, but I am discussing it beforehand so that our brain becomes active and the most of the portion of the question is solved before seeing the solution. So minority interest has been calculated already. How? 288 minus 48, answer 240. 240 is the net asset, and 20% of 240 shall be 48,000. Minority interest shall be 48,000. In order to consolidate the financial statements, we will just add up the assets and liabilities of both the companies together and replace this long-term investment, replace the investment in subsidiary with the net with the total net assets of subsidiary. As I told you that we are removing only this portion, that is only 80% shares in subsidiary, but adding all the assets and liabilities. By adding all the assets and liabilities, it means that we are adding the total net assets of subsidiary company in the financial statements of holding company. So the remaining 20% will be called the minority interest. A separate liability will be created for that. And as far as goodwill or capital reserve is concerned, whether we are required to calculate these, let's check. The cost of investment in subsidiary is 160, but the portion of net assets of subsidiary, what shall be it? 80% of 240. 80% of 240 comes out to 1,92,000. It means we are getting 1,92,000 just by paying 1,60,000. So we are getting 32,000 extra. Calculate in your calculator. We are getting 38,000 extra. So that extra amount will be called the capital reserve. Are you getting it? Now come at the solution. We are just adding up the assets. First of all, we are adding assets. So H Limited assets are 6,55,000 and S Limited's assets are 2,88,000. Total assets are 9,43,000. Assets have been added. Now we are adding liabilities. H Limited trade payable 75 and S Limited trade payable 48,000. Total is 1,23,000. Notice that we have removed the long-term investment, that is investment in subsidiary, from the asset side, and just because of this we are adding up the assets and liabilities. And by adding assets and liabilities, it means that we have added the net assets, total net assets of subsidiary in the financial statements. So as we have added full net assets, we will have to create a extra liability for 20%. The net asset was 2,40,000 and 20% of 240 is 48,000. This is the minority interest. And the capital reserve I have already calculated 32,000. How? That is, so first of all, calculate 80% of 240. 240 is the net asset of subsidiary, and 80% of 240 shall be 1,92,000, and deduct out from 1,92,000 this cost of investment 1,60,000. So 1,92,000 minus 1,60,000 shall be 32,000. मीन्स हमने 1,60,000 पे करके 1,92,000 का नेट एसेट एक्वायर कर लिया, तो 32,000 हमको कम पे करना पड़ा, तो वो हमारा कैपिटल रिजर्व बन जाएगा, जो कि ये शो हो रहा है आपको कैपिटल रिजर्व। यहाँ पे इन्होंने डिफरेंट मेथड से कैलकुलेट किया हुआ है। मैंने एसेट माइनस लायबिलिटी करके नेट एसेट निकाला था और उसका 80% करके उसको कॉस्ट ऑफ इन्वेस्टमेंट इन सब्सिडरी से कंपेयर किया था। बट जैसा कि मैंने बताया, नेट एसेट्स इक्वल टू शेयर होल्डर्स फंड, तो शेयर होल्डर फंड वाली अप्रोच से भी इसको कर सकते हैं कि आप जो भी सब्सिडरी कंपनी की बुक्स में ऑन द डेट ऑफ एक्विजिशन ऑफ शेयर्स इन सब्सिडरी जो भी रिजर्व शो हो रहे हैं वो आपके प्री एक्विजिशन रिजर्व्स हैं, उनका 80% पोर्शन कैपिटल रिजर्व होगा होल्डिंग कंपनी के लिए। तो 4/5 मीन्स 20% ऑफ 25,000 एंड 4/5 मीन्स 4/5 that is 80% of 25,000 and 80% of 15,000. 20,000 plus 12,000 equal to 32,000. ये 20,000 सॉरी ये 25,000 एंड 15,000 कहाँ से आए हैं? जब भी शेयर एक्वायर किए थे एच लिमिटेड ने एस लिमिटेड में, उस डेट पर जो भी रिजर्व एंड सरप्लस शो हो रहे थे एस लिमिटेड की बुक्स में, वो रिजर्व एंड सरप्लस प्री एक्विजिशन प्रॉफिट्स हैं, जिनका 80% शेयर होल्डिंग कंसोलिडेटेड फाइनेंशियल स्टेटमेंट में कैपिटल रिजर्व के नाम से शो होगा। एसेट का एडजस्टमेंट हो गया, लायबिलिटीज का एडजस्टमेंट हो गया, माइनॉरिटी इंटरेस्ट निकल आया एंड कैपिटल रिजर्व का अमाउंट भी निकल आया। Guys, always remember that do not do anything, never do anything in the share capital, because शेयर होल्डर्स को हम कोई भी एक्स्ट्रा राइट नहीं दे रहे हैं, ना ही उनके कुछ राइट्स कम कर रहे हैं। वी आर जस्ट चेंजिंग द मैनर ऑफ शोइंग द फाइनेंशियल स्टेटमेंट। We are just changing the manner in which the items are being shown in the financial statement. Otherwise, shareholders की होल्डिंग कंपनी की बुक्स में 6 लाख रुपीस के जो शेयर कैपिटल थी वो एज इट इज शो होगी। पहले होल्डिंग कंपनी की बुक्स में जो लॉन्ग टर्म इन्वेस्टमेंट पड़ा हुआ था, मींस ये जो शेयर होल्डर थे, इनका होल्डिंग कंपनी की सारी एसेट्स और लायबिलिटीज पर क्लेम था, एंड 80% एसेट्स एंड लायबिलिटीज पर सब्सिडरी कंपनी की सब्सिडरी 80% सब्सिडरी की एसेट्स एंड लायबिलिटीज पर क्लेम था। अभी जब हम कंसोलिडेटेड फाइनेंशियल स्टेटमेंट बना रहे हैं, तो इसको एज एन एसेट दिखाने की वजह, इसको एज एन इन्वेस्टमेंट दिखाने की जगह हम इसकी नेट एसेट्स को ही अपने फाइनेंशियल स्टेटमेंट में इंक्लूड करके दिखा देंगे। Position will remain the same, and the right of the shareholders will not neither be enhanced nor be reduced. So this is the solution of the question. I hope this example is clear to you. We shall discuss some more examples with little bit more difficulty in the next class. So till then, thank you very much. Bye bye all.